Hello and welcome to today's webinar brought to you by A-Team Group. Today we're discussing the evolution of enterprise data management for ESG, or as I pithily like to call it, EDM for ESG. We're going to be looking at the challenges of sourcing ESG data to meet investment and regulatory requirements, and how to bring those data sets together in a way that can help accelerate sustainability performance and other requirements under that ESG banner. As usual, I will be moderating this session. My name is Andrew Delaney. I'm a Chief Content Officer here at A-Team Group. And I'll be joined by, as usual, a very esteemed panel who are here to generously share their experiences in this area of the business. So we'll be looking at, getting a progress check on EDM for ESG, looking at the challenges of managing unstructured and non-standard data, hopefully delve into some best practice approaches to data architecture and automation, and then really to delve into some ideas about how best to build, buy, use hybrid solutions, incorporate AI, and finally we'll get to what benefits you can hope to enjoy once you get all that right, and perish the thought what happens if we don't get it right. So we'll get into all that in a little bit, but let me first ask our panel to introduce themselves. Welcome, panel. Rathi, you're on mute. I'm going to ask you to introduce yourself first. So over to you, Rathi.
Hi, I'm Rathi. I work at Vanguard. My role is implementing the global ESG data strategy across the enterprise. So what that means is working with business stakeholders and technology teams to help deliver ESG data to meet multiple use cases across the organization.
Fabulous, thank you. And as I say, welcome, Rathi. Kaushik, great to see you.
Hi, Andrew. Well, great to be here. So I'm Kaushik. I am the head of ESG data architecture and solution at NatWest. So I lead a team of data SMEs who are responsible for driving the data and modeling architecture and solution advisory and the overall end-to-end framework for every ESG initiative across the bank.
Very good. Thank you very much. Last but not least, Elizabeth.
Yes, hi. Thanks for having me. I'm Elizabeth Seep. I work for Rhymes Technology. We are an EDM company who also manages ESG data as one of our data domains. And so I'm excited to be here today.
Very good. Thanks, panelists, for joining us and for sharing your expertise. It's greatly appreciated. Thanks to Rhymes Technology for sponsoring today's session. This level of support is what makes these sessions possible. So we really appreciate that. So a bit of housekeeping first. We will be using Slido, which should be visible on your screens if you're watching this webinar. You can use Slido to ask questions or indeed to take part in any of the polls that we will be running on today's session. To give you a test and to get you in the mood, we're going to throw a poll question at you first. So if we may have the first poll question, please. And that question is, how much progress has your organization made on enterprise data management for ESG? So if you, the audience, would care to get on with voting on that poll question, you should be able to see it on your Slido. I can see it on mine. We're going to get going on our list of prepared questions, and then we'll come back and look at how you voted. So let's get our discussion going. I'm going to throw the first question, a bit of a scene setter, to Rathi. In your experience, Rathi, how much progress have financial institutions made on enterprise data management for ESG, and what is it that they are trying to achieve?
Sure. So I'd be interested to see what the poll looks like. But what I would say is that I think management of ESG data has been focused for a while on analytics and reporting requirements rather than kind of looking at it as an enterprise data management requirement. And I think this is to a great extent also driven by kind of where businesses are with understanding their own business ESG strategy as well. Because unless you have that overarching business strategy for the organization as a whole, creating an ESG data strategy and creating the infrastructure for enterprise data management kind of comes as the second piece on the implementation side. I do think we're all moving in the right direction. I've had several conversations with many peers in the industry, and it's quite good to see that the conversations are similar and the challenges are similar as well. But the fact that we're all asking the right question gives me comfort in a way that we're all thinking about it, we're all progressing in the right direction.
Very good. Elizabeth, what do you see?
That's right. I agree with Rati as well. I think one of the most common questions we're seeing come to us either directly or via RFIs and RFPs is, please illustrate a target operating model for me. What does good look like as a target operating model for ESG data as part of an enterprise data management solution? So obviously there's a lot of pressure coming from the compliance departments, public commitments, regulatory reporting, client reporting, and with that, the CDO, the CTO, the CIO, are all working together, including the head of sustainability or experts in that area, to really start to think about, here's our operating model today. What do we want it to look like in the future? Some of the key boxes in that operating model tend to be around, how do we want to ingest the ESG data and where? How do we want to model it? Where do we want to store it? How do we want to optimize our spend around it? Because the cost has been increasing and the amount of that data has been increasing for a long time. Where do we want to perform, kind of that entity matching, entity resolution process? How do we want to match this data to our entity and security master? And depending on the clients, there's also perhaps, our own client data, whether that's, client-specific ratings and scores. Perhaps it's an active manager and they have engagement data. So that's also a big part of ingesting data, and how do you do that in a streamlined way? And like Rati said, and then it's the outputs. Where are we going to do analytics? What are the profiles of who's doing those analytics? What are the use cases around reporting, client reporting, regulatory reporting, perhaps engagement again, and also, the traditional investment processes. So those are really the boxes we see everyone trying to figure out how to work towards that future state.
Very good, thank you. You mentioned all those lovely C-level acronyms, CDO, CTO, CIO, etc. I mean, do you think, in your experience, Elizabeth, that ESG has gained sort of a high-level attention fairly rapidly compared perhaps with other use cases for EDM and data management in general?
Well, absolutely. I mean, it's the newest to the EDM data domain, right? It's the newest data domain versus price master, sec master, those other items, right? I would say 2 years ago, we were watching, and of course it's very different by firm because, there's a big journey that everyone's been on, and everyone's in different places. Like you'll hear from several leaders in the space on our panel today. But yes, 2 years ago, I would say we were hearing about the issue of trying to make this an enterprise data solution. It was moving away from, the data management was moving away from ESG analysts, from the sustainability team, and hitting the desk of the CDO. And now the CDO is bringing in, a traditional mindset of how do we look at this from a target operating model architecture perspective? How do we set this up to succeed for the long term?
Yeah. Very good. Excellent. Thank you. Right, let's have a look at the poll results. Not too granular, these questions, but I think the idea looks like some progress is the winner, if you will. Elizabeth, thoughts on that?
Yeah, some progress. Like I said, it's very varied. It's a journey. I think we see a lot of asset managers in the space who have been committed to sustainability for a decade or more and have built a lot of processes internally, right? And I think we're seeing now the CDO and the CTO really question, do we continue to spend an enormous amount of money growing this internally, or do we start to think about what's commoditized and what could be a buy opportunity versus where we want to continue to invest and differentiate and make sure that, the right people are doing the right jobs. ESG analysts aren't scrubbing data. Your data scientist isn't scrubbing data. I think that's some progress. I think some have done a lot internally. So yeah, definitely.
Okay. So some level of maturity coming through. Very good, thank you. Next question. Let me throw this one to Kaushik. Kaushik, what do you see as the macro challenges of EDM for ESG?
Hi, Andrew. As NatWest, we have been working on the ESG challenge for several years now, like other financial partners. Now, what we have noticed over the years, ESG definitely has grown in leaps and bounds, both in terms of adoption, recognition how important it is as a strategic goal for the banks and asset managers and insurance firms, as the need to handle it holistically. So if you look at historically, before going to the macro challenges, financial firms were brilliant in having very siloed SME knowledge, silo upon silo upon silo. And what it does is, for that particular use case, you have got a bunch of guys who are brilliant and can handle that data. So ESG kind of throws a spanner at that and says that, you know what, if you have got regulatory reporting saying certain data, and you've got marketing saying something else, and you've got departmental heads who are standing in front of PR and saying that, you know what, this is our report is, all three and more needs to speak the same number. Otherwise, you'll be held accountable, both liability like greenwashing and all. So what it means is, driven by all these factors, the need to consolidate enterprise data architecture has materialized. Now, ESG data, unlike other data, is a lot more complex because there's a new kind of data the bank is dealing with. There's swaths of vendor data. Every vendor, even after 4 or 5 years, we haven't got a market consolidation. We have got 3 or 5 top vendors who provide breadth of data, but there are niche players. The remaining 50% is covered by multiple niche players who provide the depth in particular segments of this particular niche. So what it means, all FIs are having to engage with multiple vendors, multiple public sources, and then the challenge comes with matching, modeling, just industrializing the whole thing end to end. And this is just one journey. Because we are heavily audited and regulated, our biggest challenge is ensuring, can I run the same thing when I run it next month and next month and next month? But that doesn't happen because these are public data. You don't have control over it. And even the vendor data, most of the vendor data, they said, we are publishing this to you on a best endeavor basis. It's not regulated. So I think the macro challenges are at every facet of adoption of this and management and industrialization of it. And while the recognition of how important it is growing, and I completely resonate with what Elizabeth and previously Rati has mentioned, that in the industry, CFO and CDO are probably taking the lead on it, because CFO probably has to deal with the regulator the most when it comes to ESG, and CDOs have to parse the swaths of data. But all the business heads are coming with more and more use cases driven by customer demand, investor demand, and they're feeding it upwards. So I think across all FIs, the whole entity as such, there's a joined up data requirement that's come up. So the enterprise data requirement has come together.
Very good. So it's a timely topic. Rathi, is that your experience, would you say?
Yeah, definitely. And I'd probably add a little bit more as well in terms of what we are noticing here as well. So Kaushik kind of alluded to integrating it into existing architecture, etc. So I think that whole integration into existing systems is definitely a challenge, because ESG data cuts across domains, unfortunately. Like, I don't see it as a standalone domain on its own. Another element that I think is not easily available because there isn't a clear taxonomy around it is metadata requirements. So regulators are expecting us to collect metadata, but there isn't a single standard or a taxonomy or a data classification system. And kind of associated with that is the data governance. So the interest by senior leaders on ESG data is not surprising because it is sensitive information. And if you get it wrong, the penalties can be harsh. But there also needs to be sufficient understanding, not just at the senior levels, but at every stage in the organization. There's also an expectation that data professionals are now able to consult with the business and actually support them in making decisions on which is the right methodology to follow. This is particularly difficult where coverage is poor. So where coverage is poor, you have a lot of vendors trying to build methodologies to actually support that. Now, how do you build a governance model without actually going down to the level of detail to understand how those vendors are actually calculating those numbers or providing that information? How do you build controls around that? And kind of related to that is also, I mean, I do see some positive things happening, like, for example, standards being set, like ISSB standard or the PCAF standard, etc. So there are things happening in the right direction. Couldn't happen fast enough because the volume of requirements is just, it's like an avalanche, and the ability to source the right data is difficult. There's also this point around how much information can you actually get when you're performing due diligence on vendors. There's a certain level of insight that you get when you actually start engaging with the data and looking at the data to a great degree of detail. So I think it is an evolution, but I think all of these challenges happening at the same time when we're all trying to move really, really quickly to meet certain requirements is just making it harder, if you like.
Very much, very much. I mean, we've had EDM as a discipline for 20 years or more, and still people bemoan the lack of standards in traditional business, right? And here we are, 3 or 4 years into ESG, if you like, and I think a monumentally higher level of complexity makes it certainly very challenging. Let's find out what our audience think about those challenges then. So we're going to go to another poll. So please go to your Slidos and let's address this question. What are the problems of non-standard and unstructured ESG data at your organization? And on the Slido, you should see a bunch of options. Is it sourcing the data? Is it the data volumes? Is it integration of data? Is it data quality and timeliness? Or are you the one person in the room who has no data problems at all with ESG data? Let's find out. Okay, while these guys are voting, we'll come back to our panel. I'm going to throw this one back to you, Kaushik. Let's talk about these challenges presented by non-standard and unstructured data. This is what makes it complex, right?
Definitely. So in terms of non-standard and unstructured data, let's start thinking about where it originates. So if you are paying for the data, more often than not, the hard work has been done for you, at least from a technical perspective. If it was unstructured at the beginning, it has been made structured. But just the vendor data is not sufficient. You have lots of public data from research material, which are in PDF, from public websites, which may or may not get updated, to sustainability reports, which are large, chunky PDF documents, of which you only need a very small table or information out of that. So all of these, you need to bring it in, parse it, make it standardized so that you can then feed it to decision-making metrics, be it MI analytics use cases or operational use cases supporting customer engagement. Now, for all of these, what you need to do is the technical problem. You have to host this various forms of data in different shapes and sizes. I'm not even going into the complex stuff such as locational data, which would become very much prevalent when we go towards a TNFT and other nature-related solution. We're talking about just the carbon stuff for now. Now, hosting them, parsing those data, and then repeating it, that is still a problem. So if we look at some of the industry engagement that we are having, people are happy just to get a yearly scan of these material from various sources. Most of it done manually, most of it downloaded manually by a bunch of guys typing it in from that document, believe it or not, and then using it. I think the next transition needs to be either these data made structured, or a solution then have the ability to bring it in, source it, and drive the insight off. I think the problem is not with having the data. There's a big gap between having the data and making it usable. So I think those are the main blocks we are still looking to drive as of now.
Absolutely. Elizabeth, would you care to add to that?
Yeah, I definitely second. The biggest challenge is there's lots of data. How do you make it work into an investment process, right? So yes, the volume of the sources, if you're collecting private data or going out collecting public data on your own, location, geospatial data, that's a new type of data set to deal with. It's different than other financial data sets. And then back to Rathi's point, also, it's around the metadata, right? You want to understand, was this data point disclosed by a company, or was it estimated by a third party? You know, what was the date that this data was collected? What was the date it was published? Is it stale? So you really want to understand a lot of pieces of information around that actual data point. So that comes to, you know, are you getting that level of transparency in the data you're receiving? And that's where, you know, a lot of the non-standard kind of comments come up, where you can't compare, you know, scope 1 and 2, they're in different denominations across vendors. The rating models have different methodologies. They're not very comparable. You know, a lot of that non-standard type data is a big challenge for the traditional data management office. But on the contrary, I find, you know, that the actual decision makers, PMs, ESG analysts, fundamental analysts, really enjoy the difference of opinion. So you have differing opinions even across a firm, and different users to appease as well.
Very good. So just to
point.
add to Elizabeth's point, Andrew, I think that's a very valid point. There's another layer to it. Probably something only banks among financial services firms and specialty lenders are facing. Is it how do we help the customers decarbonize? So the scope 3 reduction actually would mean helping them decarbonize. So that would actually involve collecting data which never existed in structurally, like operational data, and collecting them, going through the journey is something everyone will struggle with in future, especially for small and medium enterprises.
Very good.
And actually, if you start then also looking at how vendors are using that data, because a lot of my vendor conversations, I'm always interested in talking to vendors who have like more interesting use cases and like what is coming down the horizon almost. And a lot of them are using, for example, a lot of unstructured data in the public domain, like Kaushik mentioned, to be able to make to be able to have views on certain companies. So research analysts in data vendors are going and reading through a lot of these qualitative commentaries and reports that are being published by these companies, even as part of in documentation that isn't traditionally where you would find ESG data as well, like even quarterly earnings reports, for example, and then using all of that to be able to inform ratings that they're then selling to financial institutions. So in order for us to be able to understand what does that rating actually say, we need to go down and see, well, what is the underlying data being used for that? So I think that just adds further complexity, if you like, in terms of how that data set is being used today.
Very interesting. Thank you. Let's look at the poll results. And it looks to me, well, integrating the data is top one here. What do you think, Kaushik?
Yeah, definitely. It reflects, I think the audience reflects my earlier sentiment.
I think so.
You can download everything, but doesn't mean you can use it.
Yeah. Looks like that's the issue. So integration and of course the quality of what you're getting, very much the issue. Right, thank you. Let's move on. Next question is going to go to Rathi, and let's talk about some solutions. We've heard all the bad news and the difficulty. Let's go to some stuff we can use. What best practice approaches to data architecture can financial institutions take to resolve these issues, Rathi?
So I would say ensure your architects are well aware of the end goal. and have a good understanding of the existing infrastructure within the enterprise. I mean, that's key. Because I think there are lessons to be learned from other data domains and systems that could apply to managing ESG data. So like I said, I don't see ESG data as another domain. I see it as something that's cutting across existing domains. So having that understanding is really important. The second thing I would say is try not to build everything in a day. I think we all feel like we have to, and I can understand why. However, start as you would like to move on, and be aware of that North Star, but recognize that it will take time to get there. And at some point, you likely have to pivot. So kind of be aware that as requirements keep arising, new data sets from multiple vendors are likely going to be required. So make sure that your design is robust enough, but at the same time flexible enough to allow for these changes down the road. And then finally, I would say this is why you need to be aware of existing infrastructure is the ease of simplicity to integrate with other data domains and systems. This is quite an important point to consider because you can already see that a lot of business teams are expecting analytics, looking at both performance data as well as ESG data side by side. So we're not talking about ESG kind of sitting in its own space. We're talking about commingling everything and getting a more holistic view of your portfolio.
I think that's very interesting right there. I mean, from some of the conversations I've been having, looking at ESG almost becomes a pioneer use case for dealing with this sort of complexity and variety of data. I'm talking to people who are viewing ESG as a sort of operational risk problem as much as anything else. And then extended to that, they're still looking at their ESG solutions and saying, well, could I extend this to geopolitical risk data? Because that's similar in characteristics, right? It's perhaps not as complex, but it looks a lot similar in terms of formats and unstructuredness and websites and what have you. So I think it's quite an interesting sort of position we're in right now. Anyway, just an observation. Elizabeth, best practices.
Yep, that's right. I think, Rati hit the nail on the head where, you have to figure out what is your current architecture, what is your target operating model in the future, and understand that you're integrating, within all your current systems as well, because this is not, ESG data is not operating in a silo. So, it will be different by the type of company, right? We have, if you're a passive manager versus an active manager, you could have a very different architecture to accommodate that. If a lot of your AUM is with public companies, that's one thing, but what if a lot of your AUM is invested in private companies? That's a very different kind of architecture probably model that you'll end up setting up. But what we really see is first design the target operating model. I asked a client recently, could you share your, it was a prospect in an RFI situation, could you share your existing operating model? And he said, well, take all the boxes in the target state and just shake them up and basically throw them on the table, because that's kind of the model today. So that meant there wasn't a strong model today. So what do we want the future to look like? And then, like Rati said, you can't do it all in one step. So then it's prioritizing. And I see, first prioritization usually happens around regulatory reporting. A lot of asset managers or financial institutions started there. That was the most immediate need, and then progress to the other boxes in a logical order.
Very good, thank you. Let's move on to the next topic, which is automation. Let's stay with you, Elizabeth. Question is, what is the role of automation here, and where and how best can it be applied? I mean, it must be difficult to create automation out of such a difficult set of data sets, if you like.
That's right. Well, obviously, there's the architecture, but there's also the tools that you could use to automate, right? So I think if we zoom way out, you want to, we're seeing firms figuring out, okay, what can be automated, or what's more of a commodity activity in the market? Aggregating public third-party sources that are covering publicly traded companies. standardizing templates that cover private companies and ingesting those. Validation checks, that's a great one that, can be done once and scaled. As long as the entity and resolution, security mastering, and then from the use cases, there's automation that can happen around regulatory reporting, client reporting, screening tools. So all of these types of tools can really be apt for automation. And of course, as Kaushik was mentioning, a lot of what he's mentioning, NLP could be useful. Machine learning can be useful for validation checks. And I think we're going to talk a little bit more even about touch on AI later as well.
Yeah, we were starting to get some questions from the audience about exactly that, but I'll hold that question till a bit later. Kaushik, role of automation.
Yeah, I think automation is fundamental. So I'm in discussion with other partner firms who are in wide spectrum, people who are in Excel to where we are more towards fully automated. But that required a strategy of how we want to set up ESG. And that has happened based on our initial understanding. So the way we have set it up is ESG needs to be cutting across all use cases, reflecting back on what Rathi was saying earlier. And how do we do that? Because we have got a mixed bag of use cases, because I'm covering franchises across. You've got retail, commercial, you've got private banking, markets, and even European exposure through our BSI and stuff. So there's a wide variety of exposure, and each one of them are set up their own verticals. So the very first thing is the first use case, which is your regulatory use case, stress testings and stuff like that. So your analytics use cases. So everyone has started with that because that was a key driver. But very quickly, that has also evolved to operational demands. So retail customers asking for, okay, can I get green products? And how do you do that? We have got, for example, a directive to say that we have green product for customers who are buying A and B homes. And how do you facilitate that? You can't do that unless you have got one centralized data warehouse or data lake house, whatever you want to do it, and have the ability to support both analytics use case and operational use case with your technical estate spread across all over, multi-cloud, on-prem. So I think that level of automation is important. Now, this is an internal servicing automation. The next layer is how do you interact with your vendor partners and your public source partners. So vendor partners, we started with a fairly aggressive way of adopting it. So I kind of went with a strategy that, we are not going to use files and APIs at all, purely because the volume of data that we have to source, files and APIs tend to have their own technical challenges purely because it's historical technology. So we have moved completely to cloud, and that has helped us, shrink our time to delivery timelines rapidly, because we can assess data quickly, decide if the vendor is fit for purpose, because the same data is provided by multiple vendors. What do? So we check if it is not fit for purpose, move to the other one or the other one. And cloud to cloud is the only technology that allows us to do that at pace and across wide set of customer data. So I think what I'm trying to say is both external engagement and internal engagement, automation is a key to move at pace.
Very good. Thank you. Let's move on. I'm going to throw this one to Rathi. Rathi, this actually harks back to something you mentioned earlier about methodology for ESG scores and ratings, sort of underpinning, what you get from vendors. How do those methodologies fit into data management, and what are the problems and solutions when you start adjusting them for your own purposes?
Sure. So I think for any successful data professional, it's important to understand what the key business requirements are and to provide some sort of consultative support to stakeholders. Now, in order to do so, you need to have an understanding of the underlying methodology, like I mentioned before. And that's the only way you can provide that end-to-end service to your internal customers on kind of assessing vendors and all the way to delivering the suitable data and underlying all of that is your governance and stakeholders and controls and validations that are kind of key pillars of enterprise data management. Now, a robust taxonomy and metadata framework would support this value addition to what I call traditional enterprise data management. Now, I think in the past, like a lot of data professionals would think of them just kind of sitting down and kind of working on computers and kind of figuring out how to deliver the data. But I think we are now in this world where I think there's more and more engagement with the business that needs to happen. And I think that is quite important when it comes to ESG scores and ratings. So I'll give you an example to bring this to light. So I was recently speaking with a vendor who was walking us through how a score was arrived at for a certain company. And while walking us through this, the vendor was demonstrating how transparent their product was by showing us that, look, this is the particular revenue threshold. And if a company hits that threshold, then we give it a score of X or Y or whatever. My immediate question after that was, it's great that you have that level of transparency, but the true test is, can I move that score up and down, or move that threshold up and down? And what is the impact I'm going to see on the end score? Am I able to actually go end to end to actually understand, okay, you're giving me the underlying data. How can I then use that to give an alternate view of the world to a portfolio manager who wants to be able to do that? And unless I have those conversations both at the vendor side as well as at the end consumer side, it gets really hard to kind of help the organization build that into almost like a part of the target operating model, like the whole consultation piece altogether.
Very good, thank you. Kaushik, anything to add on to that sort of methodology side of things, transparency?
Yeah, absolutely. I think just to add to what you just said, it'll be so much easier if we have a governed methodology that everyone uses. Currently, we are struggling to decide which ratings to use. So it just falls on us to understand everyone's rate methodology and probably create one for ourselves by a variety of means. That is not very sustainable, especially in ESG world. So in the long run, if we have got a regulatory oversight of ESG rating against companies, now for us, we don't need to then worry about tens of other metrics that we need to then source to generate that. So our life becomes a lot easier. What it also means that customers can get better service from us, because financial firms are very good at creating financial products and then servicing the customer, not necessarily making sense of the underlying data, but we are having to do that. And which means the whole pipeline gets more and more complex. So my point is, I think governance is very, very urgently required in this space, and preferably as broad as possible. Maybe multi-tiered so people can make decisions at different levels.
Very good, thank you. Okay, let's move on now to talk about some solutions. Again, some of these things you've touched on a little bit, Kaushik, but I'll throw this question to you. How do you see the options for building, buying, or using hybrid solutions for ESG enterprise data management?
The answer is depends, I suppose. There is not one answer fit all, unfortunately. Depending on the top-down strategy of a financial institute, they might choose to do or be protective of what they want to create as a service and as an entity. They decide that everything is built, there is no buy. And on the other side, there might be smaller firms or firms who are not interested in building capability ground up. For them, the buy option might be great. When we have somehow landed on somewhere in the middle, the hybrid option, whereby we can pick and choose which partner provides a specialist service for us. So for example, the public cloud services like AWS and Snowflake are a very close partner for us because they have niche skills that we need. For example, Snowflake allows us to source data from variety of vendors because as long as they're cloud, the cloud agnostic solution allows us to do that. AWS has their own niche skills, which helps us. We are also working with providers such as Octopus Energy, Global Farm Metrics, variety of external things. So for us, hybrid is working really well. We focus on our skills, build partnership, so we can keep ourselves flexible in what we want to build and what we want to partner with others. But it might not be the same for everyone. So I think there'll be a scale, and depending on the strategy, it will align to that.
Very good. Thank you. Rathi, your thoughts on that?
Yeah, so I think like any build or buy decision, it kind of depends on what you want to focus your attention on, like Kaushik said as well. When I think about build versus buy, I would say 4 considerations. Cost, of course, is a big one. Also the time that it would take to build the infrastructure and maintain it on an ongoing basis. So some of the stuff that Elizabeth was talking about, like entity resolution, etc., it's no mean task. And we have to be clear on what our raison d'etre is as a financial institution. The third thing I would say is the development of the team. Just making sure that you have a motivated set of team members who are actually interested in what and developing their knowledge in the ESG space as well. I think there is definitely a dearth of talent in this space, and the more and more you're able to build a team and retain them, the better it is. And providing them the opportunity to add greater value to the service offering is an important element of that. And kind of related to the value-added service, I would say related to that, I would say the value-added services as well. So I spoke at the start about analytics. I've spoken, I think, a lot about education and consultation. Personally, those are services I would think are good to be held in-house, because you're developing the team, you're developing the organization as well, to be able to become to build expertise in this space.
Very good. Okay, thank you. We're going to move on to the question about AI, and I'm going to add in, just for a bit of flavor, some audience questions that are related. So our question is going to go to Kaushik first, but everyone should contribute here. How and when will AI technologies be used for ESG enterprise data management, and what will they deliver? The audience question is, do you see opportunities for using AI to collect and structure unstructured data? And then there's another question from the audience saying, why not use tools that can automatically scan and extract data and facts from unstructured information, using a taxonomy and ontology, and then map that information to the structured ESG data that we've got from perhaps the sort of business as usual vendors and providers? So there's a bit of a mess here, but I think the underlying theme is, how can AI help us extract data from unstructured data and put it in a more structured format?
Yeah, I mean, AI is the flavor of the month or the year, I suppose.
Sure.
And everyone wants to know how it can help us. And the answer is it can. But I think everyone working with AI would know that you need to have a good enterprise data architecture and framework before you can apply AI on top. Now just delving into some of the core concepts that the audience has referred to. Can we use AI to help us with ESG data? I think the short answer is yes. But how we can embed that into an enterprise lifecycle is the main challenge. So we have got industry partners who I'm aware of, where a team member has posted confidential data or secret data into ChatGPT trying to get more information. That's a massive security breach waiting to happen. So I think security is a must concern. We need to think about that and see how we can embed it. Having said that, large language models or the other AI technologies definitely is going to play a part. And it could play a part in a variety of ways, making sense of unstructured data. It could be as simple as, can we increase the matching rate between our internal portfolio data, be it your party ID level data or entity physical asset level data, to external information, or to drive insight of locational information, because we'll be getting more and more geospatial data. Can we make sense of that? A variety of levels of satellite imagery. So I think those are the use cases. AI would definitely come into picture, and over time, what I think is going to happen is it is going to become more and more mainstream. I think this year and probably for the next 12 months, the main objective of most enterprise financial institutions is going to be, if I take a large language model, what are the consideration I have? What are the cost consideration I'll have for training a model into our internal data set? Can I use something like ChatGPT, which is now very popular, but how it against, say, Vicuna, which is a free LLM, and maybe that gives me the outcome, but at a much cheaper cost. So I think once those strategic discussion has been taken, and last but not the least, the ethical consideration. Ethical consideration, is the training data diverse enough to fit the whole breadth of population that is possible? So I think those consideration, once is defined, I think AI is going to be very helpful. But I think at this point, it's an initial stage, very initial stage.
Absolutely. Thank you. Elizabeth, what are your thoughts on those things? AI,
Yes.
data,
Yeah. And pertaining to the audience questions, it's always about putting the right technology to the right problem, right? So maybe NLP or machine learning fits one type of problem. What I think AI is really exciting to solve a problem for is really around ESG analytics. So, as we're saying in a complex way, talking about geospatial data, climate data, location. It all comes down to ESG data is really important because it has relationships to each other, similar to, say, AML data sets. You need to know the location of a facility. You need to know what's happening to the climate in that facility over a period of time. You need to know what the parent entity of that is. You need to know who are the suppliers of that entity. So this relational nature of ESG data to generate new insights is what's really interesting. What I'm most excited about, and I'm seeing happen at our firm, is using ChatGPT to write code. So it can write code and take away a problem of overcoming, like everyone can be a coder now, which is really exciting. So you can query a large amount of structured, data modeled data that is relational in nature. And you can have somebody who doesn't know how to code suddenly write a code to ask a question to that data set very quickly and get a new insight that you wouldn't have gotten before. So I love that it bridges that gap of, everyone having to be a coder. Now, no one has to be a coder, and we can all still, get the information we're looking for.
Thank goodness, I've been waiting all my life for that. So good. Okay. Let's go to our final poll. We can just about squeeze one more poll in. So on your Slido, you will see the question: what are the benefits, or do you expect the benefit? What do you expect the benefits to be of getting enterprise data management for ESG right at your organization? Bit of a mouthful, but I think the idea is what happens. What do you get out of this? And you can see the answers there. So go ahead and vote, please. And while you are voting, I will throw a similar question to our panel. Starting with you, Elizabeth. What are the benefits of getting enterprise data management for ESG right? And what happens if you get it wrong?
Okay, well, obviously, if you get it right, it's a lot of things we've been talking about today. A high level of governance, transparency, data quality, operational control. All these things will allow clients to be confident when they're reporting down to other clients of theirs, to regulators. It's a growth opportunity. It's a differentiation opportunity. Clients will, if they're creating ESG product, will be able to feel confident about what's in that product and where they can honestly market that product. So obviously, there's a lot of benefits. Getting it wrong today is really pretty much limited to reputational risk. There haven't honestly been really big fines from regulatory bodies at this point. Out of the EU, I think regulations are still taking a do your best, disclose as best you can approach, but the hammer hasn't come down yet, and obviously the US is lagging behind that. So right now it's about reputational risk if you get it wrong, but I would imagine in a few years it's also going to be about regulatory fines.
Yeah, Rathi, do you agree with that?
Yeah, definitely. The one thing I would also add is while I agree with what Elizabeth was talking about when she was talking about the geographical differences, I would also add, like in Europe, there's obviously a greater expectation around what financial institutions are putting out in terms of ESG data to support client preferences and client requirements. And from that perspective, it could very well be a top risk for many organizations to think about, well, if we don't meet these client requirements, what's the impact going to be on our flows? So that's especially in Europe. The other thing I would add is also the cost and the operational inefficiencies. If you don't have an enterprise-wide data management approach, you will have siloed management of data across different teams in the organization. And as nightmarish as that sounds, it does occur today in many firms. So what that leads to is kind of insufficient controls to kind of manage all of that data. Thinking about when you're reporting on that data, is that the same data that's being used by the investment manager to make investment decisions? Are you opening yourself up to some sort of liability risk as a result of that? And unless you have that enterprise-wide visibility of everything that's happening across the piece, it's quite hard to kind of get your arms around that and say, well, this is how we're going to approach it, and this is how we know that we are saying what we do and doing what we say, if you like.
Very good. Thank you. Okay, let's quickly look at the poll results, please. There they are. Rathi, does that surprise you?
No, it doesn't. The transparency of data and processes is an interesting one. One of the things that I was thinking about when I was talking about the cost and the operational efficiency is also, it's not just transparency, it's also like what do you do once you have that transparency? How do you manage that? How do you make sure the right data sets are reaching the right teams and it's being consistent across the entire product lifecycle?
Very good, thank you. And presumably you can do more things when you've got better transparency of data and processes, so broader application of this stuff. Excellent. We are running out of time, so I'm going to sort of wrap things up with a sort of forward-looking question to each of the panel members, starting with Elizabeth. What would be your top piece of advice to offer practitioners working on EDM for ESG at this point, Elizabeth?
Number one, get all the right players with the right skill sets talking to each other. So the ESG business owners, the experts in data management, and the architecture team. Everyone has something to add and collaborate together. And secondly, talk to the market, talk to your peers. I can tell you if I see 50 RFIs or RFPs coming out of vendor side, the questions are really not that different. Everyone has the same challenges, and I think Rathi alluded to that. So, talk to your peers, see what they're doing, maybe issue an RFI to the market and start getting feedback across. There's a lot of interest in solving this solution out there and solving this problem. So, yep, getting the right people in the room and talking to your peers in the market.
Very good. Kaushik, what would be your top piece of advice?
I think looking forward the next 5 years, 10 years, ESG is going to be the hot topic, covering multiple aspects of product offering and the fundamentals. I think what we need to appreciate that, like risk and finance, this would probably end up becoming a horizontal function cutting across all areas of a financial institution. So I think we need to think strategically like that if it is to become something like that, a horizontal department across the organization, we need to have a strategy and the mandate defining that. And what it means is for all the vendor providers or internal data consumers, treat ESG data as not a political debate or anything, rather opportunity that we can, if we can solve it properly, there are huge business upside, both from a negative standpoint where regulators won't come down with your stick, which is going to happen, if not today, a couple of years down the line, and also increasing our customer base. Embedding ESG decisions in new money lending, in your annual reporting, in your customer acquisition. All of these are going to take you one step forward of your peers if you can embed them now, instead of just looking at reporting problem that you have to solve.
Very good, thank you. Finally, Rathi, your advice to people starting out.
Yeah, well, the first one that Elizabeth talked about was something I kind of would say is the top one as well in terms of engaging across the organization. The two other things I would say would be kind of related to what Kaushik said. I mean, think about how you can integrate this with your existing service offering of your function. So usually like ESG data management would sit within the larger data function. So think about what you're proposing. Does it actually fit with the existing strategy? If it doesn't, then how do you integrate? And the second thing I would say is think about whether you have the right resources to reach your end goal. There's absolutely nothing worse than being unable to bring to light your vision. It can be extremely frustrating. And so think about whether you have the right people, the right systems, and the right engagement across the organization to make that happen.
Very good, excellent, good. Well, look, I think we're pretty much out of time. So I'm going to wind things down a little bit. First of all, let me say thank you to our speakers, Rathi, Kaushik, and Elizabeth. Thank you to Rhymes for sponsoring and for making this this webinar possible. Below your screen in front of you, you should be able to see some details of some upcoming webinars that we think might be of interest to you. You can, I think, click through and register to attend those webinars. So please make sure you take a look and have a sign up. You'll also find details of our upcoming data management summit in New York in September 28th, in fact, which I believe I'm going to. So if you're in New York then, please sign up, come by, say hi, and enjoy what's on offer, which is more of this kind of discussion around data management issues. I'm always urge you to fill in your feedback form so that we can get your input into future events like these. Finally, thank you for joining us. It's been a really great discussion. Again, Rathi, Kaushik, Elizabeth, thanks so much for sharing your insights. It's greatly appreciated. People really learn from these webinars, and this has been a really great one. So thank you all again. And from me, it's a thank you and goodbye. See you later.
Yes.
Thank you.
Bye-bye.